And you wrote in your letter again recently about how Amazon, Google, Facebook, others have not really penetrated the Korean market. I wondered who does provide their equivalent services in Korea, and perhaps you could comment on any companies in that space if they're attractive, or perhaps if you don't find them attractive investment candidates, could you give us another stock idea?
Many foreign investors do not know that many new innovative business ideas started in Korea ahead of other countries, although these businesses couldn't expand globally for several reasons, including language, logistics, etc. Some examples are music streaming, messaging app, social network, video platform, and online games. These businesses models were first born in Korea. Korea is one of the few countries where the US tech giants such as Amazon, Google, and Facebook couldn't penetrate because they had to face highly competitive domestic incumbents already present in Korea. Unlike Chinese domestic champions, Korean local companies such as Naver, Kakao, and Coupang became dominant in Korea without any subsidies or protections from the government. For example, Naver is a Google of Korea and also a leader in e-commerce. Kakao is a leader in messenger, music streaming, and fintech. Both stocks surged significantly last year, so it may not be the right time to buy at the current price, although we think that both of them have good long-term prospects. Coupang is still private, but is likely to go public in the near future, probably in the US. However, we can still find many opportunities, mostly in smaller stocks because these stocks are not widely covered by analysts, both buy side and sell side. I hope you understand that we are not able to provide specific names at the moment because we are in the middle of building positions.
Yeah, that's understandable. But perhaps we can hear about those later in the year at the conference. Chan, then, something I have often wondered about is that it's pretty peculiar that MSCI groups Korea with countries like Argentina, Turkey, Pakistan, whereas, in terms of people's perception, perhaps also the reality, that's quite a mismatch. Do you think that's right? And perhaps once some of the changes we've spoken about in this interview are recognised, do you think there could be a reclassification that kicks in and increased recognition and ultimately an increased allocation from international investors to Korea?
Yes, it is hard to believe that the Korean market is still classified as an emerging market by MSCI, even though the country itself is already a developed country by most measures. In fact, FTSE recognized Korea to be a developed country. We think this kind of discrepancy cannot last too long. The eventual inclusion of the Korean market in the developed market category by MSCI is likely to attract more long-term foreign capital into Korea, resulting in a re-rating of the Korean market. Over the longer term, the current classification will be obsolete because this dichotomy between DM versus EM is archaic. Of course, a diverse group of countries in EM is not homogeneous, and also even countries in DM are not homogeneous. I think many international investors also do not fully realize that the Korean market is quite sizable and liquid. The total market cap of the Korean stock market is well over $2 trillion, which makes it to be the 10th largest equity market in the world, similar to the size of India, Germany, and Switzerland. Eventually, the attractiveness of Korean market, as Albert explained earlier, will attract a lot more international investors into the Korean market in the long term.
Thanks, Chan. And maybe what we can do here is mention that you did speak about two stock ideas in May 2020 during our last interview, CS Wind and Dow Technology. Maybe you can update us on how those investments panned out. Maybe you still invested. Albert, perhaps you can update us first on CS Wind.
Back in May last year, we talked about two stock ideas, CS Wind and Dow Technology. CS Wind is a leading wind tower manufacturer working closely with global turbine manufacturers such as Vestas, Siemens, and GE Energy. We have owned this stock for more than 3 years. Until recently, the stock has been substantially undervalued despite its competitiveness and huge growth potential in overseas market. When the market crashed in March 2020, the stock plunged even more, mainly because of the concerns that the collapse of the oil price could hurt demand for renewable energies in the short run. We thought demand might be affected for the short term, but was expected to grow in the long term because the demand increases not because of high oil price, but because of increasing awareness of the impact of climate change on the environment. The market began to recognize the potential and stock continued to move up as more institutional investors started to buy. The company recently raised about 300 million US dollars to build factories in the US. As the Biden administration is likely to invest more in renewables, including wind power, the company will continue to take on more wind large projects.
Thanks very much. And Chan, can you update us on Dow?
Dow Technology rose only modestly during last year. As we had explained in our previous interview with you, it is a de facto holding company, and most of the company's value comes from its controlling equity stake in a publicly traded company called Kiwoom Securities, Korea's most dominant online brokerage firm with a domestic retail market share over 30%. You can consider Kiwoom Securities to be a combined version of E-Trade and Ameritrade in the US. As you know, the trading volume increased tremendously last year, especially by retail investors during the pandemic. Therefore, the stock price of Kiwoom Securities almost doubled last year. However, the stock price of Dow Technology did not move much at all and continues to lag behind Kiwoom's stock price. Just to give you a sense of the level of discount that we're talking about, please note that the value of Dow Technologies controlling stake, which is 48%, in Kiwoom Securities, based on the public market valuation alone, is nearly $2 billion, whereas the total market cap of Dow Technology is only a bit over $1 billion. This is a classic example of holding company or parent company discount in Korea. In addition, we also think that Kiwoom Securities itself is still undervalued given its growth potential despite the recent price rise. So given the widened holding company discount and upside potential of Kiwoom Securities, we believe that Dow Technologies stock is providing a double discount opportunity for investors like us. So we expect the stock has a lot of room to rise going forward.
And so, Albert, talking more generally then, given the upswing in the Korean market, are you still finding many value opportunities at the moment in Korea?
Despite the market meltdown, we think there are still many other companies which are undervalued and mispriced in Korea. Also, among companies whose businesses have been severely affected during the pandemic, but core competitiveness remains intact while stock price has languished, we think we can find many turnaround opportunities. Also, we want to remind you that the Korean stock market has more than 2,000 stocks with a robust IPO market, which means that we should be able to find plenty of value investing opportunities in Korea in the long term.
Great. And thanks again so much for your time. We'll stop there. And as you said at the beginning of the interview, let's hope for a better 2021. And I really do look forward to seeing you later on this year.
Thank you, Robert, for conducting this interview. And we look forward to meeting you in person in September when we should be able to travel again.
Sure, I hope to see you in person, hopefully later this year.
Thank you.
Thank you.
Thank you very much, guys.